So we kind of understood almost all the key instruments which you're going to be trading in, right? From equity, ETF, right? Futures, options, commodity, currency. We kind of went through the gamut of all the instruments. So this is the crux, and this is the entire family of instruments, the opportunities of instrument, or the boundaries of instrument, whatever you want to call it as, which you will be trading in. And I think you will run out of capital, and you will still not be done with the opportunities. There is going to be so much. So do not think that you have to trade in everything. No. We are kind of sharing all of this so that you have the ability to, one, understand it academically. Second, most importantly, you can pick and choose that which suits you. You may just be comfortable with equity, or you may be comfortable with futures or options, or some of you commodity, some of you currency. That's fine. Some of you maybe just kind of invest in ETFs. That's also fine. As much as you kind of absorb, whatever you think, or you can do it gradually. Start with equity, then futures. Futures is very simple to kind of trade. Then go to options. Then kind of look at commodity and currency, and then see how it kind of grows for you, right? Either ways. So this whole content, what you kind of just understood, I would urge, if you want, go back multiple times, because this is the crux of the entire trading in stock market. If you do not know in which instrument you will go to trade in, you're going to find it that much more difficult and challenging, right? So I don't want that to happen. So spend as much time here, because subsequently, we're going to learn about few more other concepts, and you'll start to get your trading strategies and so on and so forth, and everything around that. But this is kind of pretty key. So now, to make that helpful, let's kind of discuss the actions at the end of this section right here, right? So what are your actions? The first set of action is, first of all, create a SIP for Nifty Bs. I spoke about that earlier. Even if you don't do anything, just the smallest amount, if you can just spare maybe just about 500 rupees every month, that's good enough. Or every week 500, that's also good enough. Start with that Nifty Bs. Trust me, in the next 5 years, the kind of returns what you will see will beat everything else. So go with that small amount of SIP, create that. I've shown you how to kind of buy and sell. Just make it a habit every month, kind of keep doing it. Next, add spot and current month futures in the market watch for the following scripts and observe their movement. When I say spot means equity. Add equity. Equity is also called as spot, spot price. So that is for equity. So add the equity and the current month futures in the market watch for the following scripts. I'm going to give you the list of scripts and observe their movement. Like, for example, you will add Maruti equity and Maruti's futures and see what happens all through the month. Whichever month you're seeing right now, whatever is the month, right? Add that current month and see what is the difference, and keep observing it daily. How much it moves. If the equity how much moves 10 rupees, how much does future move, and so on and so forth. And what are the scripts? Here are the list of scripts: Nifty, Bank Nifty, Reliance, Tata Motors, Tata Steel, HDFC Bank, SBI, ICICI, Infosys, and ITC. 10 scripts. 10 scripts. Just go select all of them, add all of them. It's very simple. I've kind of shown you how to add. Just type those names, type these names, it will appear. Add. You will add both in Nifty and Bank Nifty. You have to add the index first and then their futures contract. And similarly for Reliance and Tata Motors, first the equity, you can add NSE and their futures contract in NSE. As simple as that. And once you kind of do that, keep observing daily, as you kind of progress in this learning, observe and see how the price movement. That will give you an idea of what's happening, what's the difference between this in a spot or the equity and the futures contract, right? Because we're going to do a lot of trading in futures, and that will kind of really help you. So that is your action. So if you're going to kind of really take this action and are already excited, type in the comment, ready for action. Type in the comment, ready for action. Now, I'm going to leave you. I'm going to leave you with this one quote, which I think it's appropriate here. The quote is this: don't expect the markets to move as per your trade. Just because you're going to be trading, and if you've got on a long trade, don't expect that the market is going to go up. Or if you've taken a short trade, don't expect that the market is going to go down, right? Instead, set up your trades as per the markets move. And that is what is the key for a successful trader. And you as a trader got to understand which side the market is going to go and be on that side. It's always better to be on the right side of the market rather than being right. Have a thought about this, and I'll see you in my next module. Until then, keep practicing, keep learning, and take your actions. Hope you're enjoying. Bye bye. I'll see you in the next module.